Today, I want to take a look at one of the best platforms for investing this year, InvestEngine. InvestEngine is becoming super popular and for good reason. Their portfolio-first approach to helping investors build portfolios, along with a no ISA fee, no FX fee, and no trading fees, which is pretty unheard of. It's a platform that I am definitely considering switching to. So I wanted to take a deep dive into the platform and bring you guys along with me. Now, for full transparency, this isn't a paid-for review, but I do get a small commission if you use my link, and you get a sign-up bonus of £25. This goes towards the hours of research and time it takes to make these videos, so don't think I'm some kind of baller making millions off the back of reviews. So in this review, I'm going to be brutally honest and talk about the good and the bad points and give you my verdict. I've also managed to speak directly to their team, so I've got some answers that I couldn't find on their website. But first, do take a second to smash that like button, and if you're new here, subscribe. I'm building a £1 million portfolio, so stick around to see how I get on. As well as I'll be posting loads of beginner advice. So let's keep this as to the point as possible. So what is InvestEngine? Now I'm actually pretty jealous that I didn't come up with the concept of InvestEngine because it's very good. It makes the investing process more accessible. Now perhaps accessible isn't the right word because I do think investing is quite easy to get into. I'd say what it does is actually make good investing accessible. And what I mean by that is InvestEngine focuses on ETFs. Exchange traded funds, which are made up of groups of companies such as the S&P 500, the top 500 companies in America. So instead of trying to buy one individual company and hoping it does well, you get a broad coverage of the market. For 95% of people, this is going to be a far more successful strategy than picking individual companies, as it's not easy. Instead of focusing on things like PE ratios, earnings, debt, and all of the factors that could affect a stock price, you just buy a fund that gives you a broad coverage. The idea is to make investing easy, automated, with solid returns. So let's talk about what's on the platform. Currently, there's over 500 ETFs on the platform. There's a range of different providers. You've got Vanguard, BlackRock or iShares, Invesco and HSBC, just to name a few. And these cover a range of different sectors, equities, i.e. UK, global and US, that's your stocks. Also ETFs covering emerging markets. There's also thematic funds which cover specific industries such as robotics, tech, green energy, etc. And of course, you've got the more traditional ones covering things like bonds. You've got pretty much all of the ones you really need on here, but really, in my opinion, you only really need like 5. But there are some like HRUB, which is coming soon, which isn't on there yet. You can also request ones to be added in the future, which they're really cool about. There's also the ability on the platform to have managed portfolios, so they can look after it for you. If you choose to go for a managed portfolio, there's an additional 0.25% fee, which I'll talk more about in a minute. Now you have two options. You can either choose an income portfolio if you want income, with either a cautious, higher or enhanced setting, depending on the level of risk you want to take. Or you can go for a growth portfolio, which I'm guessing is the majority of what most investors will go for. That one you can set between a risk level of 1 to 10, depending on the level of risk you want to go for. So essentially there's 13 managed portfolios to choose from. Now what's actually really cool is you can choose to have as many of these as you like. For example, if you had say 10,000 in your account, you could split 5,000 into managed and 5,000 into DIY and see which one did better. I managed to find out from their team that there's actually currently 53% of users using DIY with 40% using managed, which is really good to see because that's where they make their money. If this was low, I'd be more concerned because obviously a company needs to be profitable. Now let's talk about their features because their features are super impressive. So what I really like is they have the option of fractional investing. So that means you can invest say £1 into an ETF, you don't have to put a minimum in. So for example, if you put £10 in, you could split £10 into 10 individual companies, which is crazy. It really does lower that barrier to entry if you just want to invest a small amount. They've got quality ETFs, but what I do like is they've got this thing called filters. So you can actually see the type of fund here. So this is an accumulating fund or its distribution, which means it either kind of fills itself up or it pays cash out to you. You can also see what it's based on. You've got ESG, you've got whether it's hedged. You can also see fees. There's also this really good feature called a portfolio look through. Now what's really hard with ETFs in a normal account, if you own say 10 different ETFs, you can't actually see how your portfolio is made up. You can go into each individual kind of ETF and see it, but it doesn't give you this broad overview, which is super nice. So you can see what sectors you're invested in and how it's broken down in a kind of chart. How much is in the UK, US, etc. You can see which companies it's built up and also what industries. That feature I really like and is something that I've been asking other platforms to do for such a long time. One of my favorite features is this Smart Portfolio 2. So what this does is essentially you pick the funds you're interested in and choose your weighting. So for example, if you set 5 different funds to 20%, then each month it would put 20% into each of these funds for you. So you can just set up your regular amount, choose it to put into these funds, and it will do it automatically. Which brings me nicely onto the next feature, which is automation. So you can easily use the same kind of functionality to put, say, £100 into 3 different securities and split them due to your weighting, which is not something I've seen on other platforms. What I really like is this one-click rebalancing. So if you have your target set and your portfolio goes out of balance, maybe you put too much money into one ETF, you can click rebalance and it will automatically sort it out for you. You can also, which is quite common, set the option to auto invest, so set up a regular amount and have it do it for you. And of course, you have got that option to go for their managed service too. And that feature does give you an estimated forecast of what you should be projected to make. The user interface and design of the platform is very nice and easy to use. The thing I really like about Invest Engine 2 is they do have the live chat, so you can talk to somebody straight away. That's something that with like Freetrade, I've never been able to speak to anybody in 12 months of being with them. There's also a really cool feature with Invest Engine, and that is a business account. The ability to have a business account is something I'm really interested in. I heard about a strategy which really intrigued me. That is when you retire, if for example you have 120,000 in a business account, you can essentially withdraw basic tax rate, say 12,000 each and every year, which could provide you with 10 years income of 12,000 in a tax efficient way. Now, I'm not saying that I'm going to have 120,000 in my business by then, but investing could help with that, and it's something I'm definitely considering if I become lucky enough to have excess cash in the business beyond pension contributions. Next, let's talk about costs, because I think costs are one of the main things that attract people to the platform. So they keep the fees low and simple. You've got 2 options here. You can either choose to do it yourself, or you can opt for the managed service. So if you choose to do it yourself, you've got no setup fees, no withdrawal fees, no dealing fees, and no ISA fees. So essentially, they're currently running this as a kind of free service in the hope that you will upgrade to a managed platform. And if you look at how they compare, for example, even to Freetrade, they're free, where otherwise you would pay £3 per month. So this just demonstrates over 10 years how much you could be saving. Now, of course, I never read too much into these because, of course, they're going to sway it so they look better. But it's actually pretty true in this case. They are way cheaper than anybody else. Now let's talk about the costs, which are maybe not just listed on the platform. These costs are going to be true of any kind of platform you go for, so they're important to bear in mind. So if you buy an ETF within their platform, you're going to pay a fund management fee, and that starts from about 0.05%. With the managed portfolios, the average ETF charge in the growth portfolios is 0.15% a year. And in the income ones, it's 0.25%. Now, this fee is likely that income funds are just more expensive than growth ones in general. But this is quite true. No matter which platform you buy these on, you're going to have these small charges. You're probably, in reality, never going to notice them. There's also a small charge in the spread of the ETFs. That's the difference between the buying and selling price. With the managed portfolios, this spread averages about 0.07% a year. So again, these fees, even combined, are tiny, and you're going to pay them on any platform. While I think they're kind of irrelevant, it's important to highlight them because you do need to pay attention, and you don't want to be blindsided if you see some fees later on. So the other option here is their managed portfolio. So this is if you want them to manage it for you. Now, for a lot of people, this is going to be great because it's going to take the weight off your shoulders. And you can see down here the total charges, for example, their fee, the ETF charge, the ETF spread costs. So the total annual charge would be 0.47% if you go for the growth, the income 0.57%. Now, these costs aren't astronomical. You would just need to be aware of it when you build a larger portfolio. I would like to really see that fee in the future being maybe capped, because I think that would attract much bigger investors. If you do go for the managed service, it's a really handy calculator, so you can put in the amount you're going to invest, and then you can go for growth or income, and it will tell you exactly how much it's going to cost you. What I really like about the platform as well is it is a cheaper alternative to Vanguard. They have a lot of the Vanguard ETFs on here, so if you wanted to open an account in an ISA, do it yourself and buy Vanguard, On this platform, you're going to pay 0. On Vanguard, you're going to pay 0.15%. So they do work out cheaper in the long run. The only downside I can see is they don't yet have the life strategy funds, which some people really like. But if you're really set on those, then you might want to look at Vanguard. But personally, I don't go for that because I think you can build something similar using other ETFs, which in my opinion can perform better. So the way they're making money at the moment is only that 0.25% charge. I did ask them whether they make money on the other side of ETFs, whether they get a small commission, but they said they don't. They only make money with that 0.25%. They do plan to add more revenue streams in the future, like upgrades and maybe different services. Maybe they'll charge for something like a SIP, a small amount. I'm not sure yet, nothing's confirmed. To be honest, if I like a platform, I'm not super worried about the fees. It's important to me that they kind of stay true to their values. They also, at the moment, have a bonus offer on. If you invest before the 5th of April, you can get £500 as cashback when you sign up. There also is a £25 welcome bonus, so if you miss a deadline, don't worry. You can still use the link below to get that bonus. Something else I wanted to quickly mention is they're actually now crowdfunding. So if you wanted to invest in the platform as they grow and hopefully make some good money back, you can register your interest now to do so. Next, let's talk about security, because I think that's something that's a little bit boring, but it's also overlooked. So let's just quickly look at how secure the platform is. So the website is secured with an SSL 256-bit connection. So the website is secure. Now your money and assets are ring-fenced, and this is pooled in a client account over at Crest. Now, what this essentially means is if the company goes bust, then your funds are held separately. In a typical company, when they go bankrupt, you can claim against their money and assets. But this isn't the case with these kind of companies. They have to hold assets completely separate to the company, so if something goes wrong, they can't be at risk. So you as an investor are totally secure. They also have the FSCS, which covers you up to £85,000. Now, a common question I get is what happens if you have more than that? Well, that £85,000 covers you on cash on your account. Now, hopefully you haven't got more than £85,000 in cash. If you have, congratulations. But really, you want to be investing that money. If it's invested, it's safe. If it's cash, only up to £85,000. And that's going to be the same across pretty much every provider I've ever seen. I've seen a couple offer more than that, but they're not based in the UK. This is a protection that the schemes in the UK offer, and they're also fully regulated by the FCA. And you can double check that on the FCA website, and you can see their registration number. And you can see that they've been authorised since 2019. Now, obviously, one downside is a company is newer than some of the big ones, but I think the space is changing a lot, and a lot of these new companies are coming to try and take on the giants. And to be honest, they've all got to start somewhere. It's not like you could start a company tomorrow and it's instantly going to be 40 years old. So for me, as long as I'm protected, I don't really mind. The other thing to quickly mention is their Trustpilot reviews. So they've had 207 reviews and they're rated 4.6. Now the majority of these are pretty good. There's one guy who kind of forgot his password, but the rest of them have been really nice. And I'd like to see them keep continuing this because I think it really does show transparency on the platform. And it's nice to see that it's not full of negative reviews. So let's talk about what I would like to see. Now let's talk about what I think is the obvious con of the platform. That there's no individual shares. And I'm sure that a lot of people would like to see the ability added to add individual shares too, because their platform's really nice, but honestly, I don't want them to, because I think it would ruin the USP, and it would probably add more costs. What I would like to see, depending on the technicalities, is in situ transfers, which is essentially transferring your existing ISA rather than having to sell everything and rebuy them. I think this is partially because of two things. One is I can see it being hassle to filter out the ones that aren't ETFs. You'd have to have the option to convert them into cash, and two is the way their balancing works. It's likely that it's easier to set it up from scratch. I would like to see a SIP available and possibly even a lifetime ISA, which a lot of other providers seem to be avoiding. I have actually managed to get hold of their roadmap so we can see what's in their plans. So let's take a look at that. So recently they've just added Auto Invest, over 400 ETFs, there's now over 500. There's a new and improved app with 2FA and face recognition for the app. They've also added a community for ETF investors, so you can talk and discuss your options with other investors. A community aspect is really nice because it feels like you're all working towards the same goal, and there's people helping each other out on the platform. There's an improved website design, which I'm not sure if that's launched already. The website is already pretty nice. And for me to say that as a web designer, I do really like it. They're soon launching the ability to to share portfolios so I could share with you what my portfolio was. They're adding ESG managed portfolios, which is people who are concerned about the environment. And I think ESG is likely going to just grow more and more in popularity. They're adding more ETFs, and I did ask about investment trusts, which I'm hoping they're going to add soon. A couple in particular for me would be Fundsmith and Smithson, which are two of my favourite funds. But I think that one just depends whether it falls inside their USP. They're also going to be adding gifting portfolios, which allows you to gift a portfolio to someone so I could invest and then gift a portfolio to you. I did think earlier if I hit some milestones on my channel, that would be super cool to do. They're also going to be adding more technical data to your portfolios, so you can measure things like ESG, the risk and yield scores. They're also looking at adding junior ISAs and SIPs, and hopefully, fingers crossed, for a lifetime ISA. The other thing they're looking at is flexible ISAs. Now, I wish I had a flexible ISA 5 years ago. What this means is if you put money in, you can take cash out of your ISA and not lose your allowance, so you can put that money back in. So for example, when I bought my first property, I had 100,000 within an ISA. I took it out and then I completely lost my ISA balance, which drove me insane. At the time, if I had a flexible ISA, it would have been life-changing, because I have more money now that I can't put into my ISA because I just don't have the space. It also gives me fear that I never want to sell that ISA because I never want to lose that allowance. So what is my overall verdict of the platform? Well, if I didn't currently have HRUB, which I can't transfer, I would pretty much be moving my portfolio there tomorrow. Besides the fact I would get £500 if I did so, I think the whole platform and the way it splits your money is just super nice. I could just go and add £500 or £1,000, split it across the portfolios, and I would really like to see it grow. I'll have to see how that pans out. If I can sell that stock, then I'll probably be moving over there. But I have to be a bit careful. When it reopens, it might shoot up maybe 20% in a day. So while I've got the cash balance, that could be quite scary. I think between taking this deep dive and also taking a look at my ISA comparison, I'd recommend this platform for any new investors. Over the years, I have made some mistakes buying individual companies, which I'm sure most of you have. And what that can do is really set back your progress. For example, if I would have just bought an S&P 500 ETF over the past 3 years, I would have made roughly 20% per year, which is mind-blowing. And it also takes so much stress out of the process. It seems like the team are really keen on adding more features, and I think with their zero-cost ISA, it just makes it a no-brainer. And if you want some ways to generate some extra income to top up your investment account, check out this video where I spent a week match betting and made over £500 tax-free. I hope this was useful, and I will see you over there.